Channels Go Crypto Investing, bell notification, like the channel, subscribe and share to get that education and information you need to fleece, heist, and shiest. The fleece heisters and shysters, as we're going to give you this quick late May the 23rd, if you can believe this already, on one of the last few days of meteorological springtime here in the greater Bloomington metropolitan area in central Illinois. Vincenzo's Go Crypto Investing, this quick morning update as we got rejected at the 50. Of course, all this shit would start to come up now. So we're going to do this, but do not disturb. And we're going to have getting rejected off of here by that 50 cents that we talked about back here, coming off that symmetrical triangle as we go to the way sort of left machine after we had the great dump of May of 2022 that started causing the Celsiuses of the world and some of the misallocation and malinvestment and some of the fraud and Ponzi scheme type deals going on to get exposed. We came into this long consolidation, and I got my old yearly review here at work in a half hour where I'm going to try to get more monies and a little car allowance to pay for my car. So give me some love and out there in viewership land. Hopefully I get a raise slightly and get some car allowance here at work. Trying to make some more money. I'll let you guys know how that goes here. As I say, looky here now. Old Vincenzo demands a couple dollars an hour, and he needs for his Targisian mobile. He needs a car allowance, right? We want a car allowance, and we'll let you know how that goes. Or does it get slammed and rejected, like the XRP did off that major resistance zone? Or how's Vincenzo's review gonna go? Let's take a look at this in chart form. Say Vincenzo's review is XRP. Are we gonna catch it on the pump side? Or are we going to be sitting up here thinking it's going to go well, and then bam, everything goes fucking wrong, and then we go into a fucking plunge, and then a long stagflation of this employment, and it's over. And then we come back into our next review with a little bit less hopes, and then we get driven down again. Or are we going to catch it on the upside, and everything's going to go well, and we're going to start here and end up here, and we're actually going to go backwards, right? We don't want to end up down here. We don't want to look like the XRP price or the XRP trader where you're up here and then you get slammed down, right? And then you try to go up here again and you get slammed down again. We're going to be down here right now, and then we're going to pump up to the upside. We're going to be bullish on a review today. We're going to be bullish on getting a little car allowance, and we're going to be bullish on what we feel like is going to happen here with our review. The opposite of what's been going on here in the old cryptocurrency market, in the old XRP sphere, as it's been sort of a disaster. And as we look into the micro time frame or the shorter time frame within the weekly candles, you can see we're still getting rejected off that 51 cents. We got rejected after breaking up out of the symmetrical triangle like we were calling, ultimately bullish back there. If you watch videos from about February through the end of March, we were telling you this had to break out, and we thought it would break out bullish and then come up against heavy resistance between 48, 49, and 52 cents. It actually got up to 58 cents. And on a wick came back down, and now it's consolidated just below the moving averages, the long-term moving averages up here in the 50 or the 100 and 200 in green and blue respectively, and sitting right on the 50 or the short term right below this major blue trading zone at 51 cents. If you're trying to get bullish, we got to start to get some buyers and breach back up into here and then hold that as support right there and then kick up to the upside, right? Or you're going to maybe try to come back up here and then have just a big double top, right? And then it reverses and comes to the downside. These are all things we have to pay attention for, but your critical level is to break back above 51 cents, sit on top of this blue trading zone and the moving averages in the weekly time frame up here, and then try to get bullish. The bearish thing would be is we get rejected and can't get back up to 51 cents, come back down to a major 37 cents support and resistance level that we've been talking about for well over a year now, all the way since we had the great dump in May of last year or June of last year. But if we come to the downside and breach this 37 cents, we're coming into a danger area, which is a last line of support between 32 and 29 cents, or the bottom part of this dump on the great flush of 2022, and that's what started this on the VP volume indicator in red, and it's been holding it, and it's been the only thing holding it as bullishness as its technical trading level, and computer algorithms place trades down here at the VP volume indicator of the history of the coin, and that's why the buyers have been there once. The buyers have been there twice, 3 times, 4 times, but if there's a fifth time, will they be there, or will they finally flush through and you have the great capitulation that I'm afraid and worried and concerned about, as I believe there is at some point a massive capitulation coming. And this capitulation is going to be unlike anything ever seen in the crypto sphere. And you can see we had a June 2023 bottom of down there. It doesn't seem to be happening by June. But I think it'll eventually happen because I believe sometime, probably this year, there's going to be a massive 70 to 80% capitulation, and it's at least coming down here to 8 to 10 cents. It's going to retouch these historic lows from back here in November of 19 and from back here in June of 17. I think we're going to hit these historic lows, and there's going to be a 70 to 80% cryptocurrency crash in the price of XRP. The same thing with Bitcoin. We're in this rising channel after this huge mountain double top that we called, and we have this little thing circled up there still because this is where we told you that the bear market started, and it did, and it crashed 50%. Then we had this descending triangle where we have descending lower support, descending upper resistance, and it forms a duck's beak where it's wider at the front, gets narrower at the end. And we told you this could be a reversal pattern on a bear market rally, and we thought the bear market rally would come up into this area, right? Because this is where there was major trading on the way down, but it didn't. It got supported one more time because markets, especially the crypto markets, like to do a little bit more than people think. Kicked up, breached an all-time high, and as soon as it did that, it reversed and collapsed 55% within a matter of October 2021 until January 2022. So a matter of 4 months, it collapsed with our industry exclusive measuring tool. The Bitcoin price collapsed from its all-time high to its swing low, 52.8% in about 4 months, right? Then we had this nice consolidation, which was a sort of a symmetrical triangle up as you had uptrending upper resistance, uptrending lower support, and then it was getting narrower at the end. But we told you this was nothing more than a mountain double top consolidation, or the consolidation that it was a bear flag, right? You have your big flagpole, and then you have your big flag of an up and sideways consolidation in a symmetrical triangle, which is a bearish continuation pattern, right? Or bullish to continue bearish. And then it broke to the downside, and then it had a mini one of these that you can't even see in the weekly time frame. Then it had another one down here, and it broke down. Now it's in a rising channel, and what we're looking for as we zoom in the weekly time frame of the candles is we got rejected by that 29,075.23 like we thought we would as we were rising up, and now it needs to hold these longer moving averages. You got the 100-day in blue above it, the 200-day in green and the below, and then the 50 in red in the middle. You need it to hold this, get back up into here, and try to bounce back up into this channel and keep trading up near this 39,000, because as you know, this is the opposite of the XRP. This is coming and hitting this from underneath the VP volume indicator, which is bearish, right? And it's the first time it's come back into contact since it broke below it on the way left machine of May of 2022. It got below it, and it hasn't been back above it since. And the first time it touched it was nearly a year later in April of 2023, and it got rejected. So the major levels is what I'm trying to tell you is 29 cents and the upper trend to break up and get back bullish and get back into this triangle and try to work your way through this red trading zone, or you're going to continue to get rejected by this 29,000. You're going to fall below these moving averages, and then those are going to flip to resistance, and then it's going to drive you back down into your 2022 lows, into this blue trading zone. Like, subscribe, and share. Peace and love.